Hello friends, so I'm here with part 2 of order blocks as I had promised, and we are going to be using Crash 300 on M15. So order blocks really work on Crash for those that are interested in Bomber and Crash. And then one tip, I realized that many of you are interested in Bomber and Crash. It's really nice. I appreciate that. But you guys don't quickly rush to those small time frames, the M1s and the M5s. You go on a time frame that allows you to see a proper market structure. You get, because when you come here, this could look like VIX 75. You get, so I recommend that you, when you're doing analysis, you go on M15 and above, so that you can see those levels and areas properly, so that by the time you go on M1, you can easily take entries over there. So now, one of the things that we look at when it comes to order blocks is looking for a support or resistance zone. So let's say this area here, you get, that we are analyzing, it should be at around, if at all we're analyzing looking for bullish order blocks, it's better we go for bullish order blocks. Then we come down here, you can see that here uh, we have this area here as our area of support. You get, this area here, it is an area of support. So as we come here, so and then we see the market behaving in a certain way, then we could look out for order blocks. You get, order blocks. Likewise, for let's say for bearish order blocks, we can see that this is an area of resistance. You get, it is an area of resistance. So possibly we could look out for order blocks in this area. So for bearish order blocks, look at them at around areas of resistance, and for bullish order blocks, yeah, for bullish order blocks, we look at them, we look out for them at around areas of no, bullish are down, which is support, bearish are up, which is resistance. You get, so then we mostly like, personally like validating order blocks where there is a clear break of structure. For instance, this break of structure whereby let's say the market was previously dropping and then it start to shoot up. You get, so I like validating them basing on that. You get, then one other thing, as we break structure, for instance, as we move, let's say, and then we break structure and then move up. You get, one of the reasons as to why we come back, one of the reasons as to why we come back, I told you, it is possible that the market maker has left behind some orders that they want to collect. You get, now I always say this, it is just a theory that sometimes as they move in a given direction, let's say from up, from down here to up here, they may not activate all their orders. You get, so they have to return back. You get, to return back to this zone so that they pick up those left orders and then they shoot up. So it provides us with a better opportunity for us to get in. And then the other thing I told you, personally, I like picking a trading range. You get, I like picking a range. Now a range, for instance, I have this upper range here, and then I have this downer range here. You get, now let's wait. If I have these two, you get, so which means I focus on this area from top to down here. You get, so let's say if I take entries, you get, as we're going to see, this was the bullish order block. If I take entries here, I can be targeting this upper point here, or sometimes I can target equilibrium, which is the middle here. You get, so those are all take profit points. Remember, M15, this is a significant time frame. If at all you show up the entry, then you can stay in it for long. You get, but then so then what is another block? Another block, we keep my personal, the more I trade is the more I keep on modifying my understanding of another block. This is a candle with the most range before a break of market structure. You get, Yes, ideally. Now, most range we can have, let's say, bearish candle, a bearish candle there, and then we have another bearish candle here. You get here. No. We could have, let me get two bearish candles. Let me illustrate. If we have this one here, and then we have another one here, you get. So we have two candles, let's say from up here to down here. So now uh, the candle with the most range, you get the candle with the most range, which means this one has more range than this one because it moved a longer distance, you get. So I would validate this candle as the order block more than this one here, you get, because this candle here has more range, it has more range. So now that's why I have this candle, the last opposite. So it is bearish before we get an impulse run that broke a market structure. So now, as we break structure, remember, for us, we know the behavior of the market. We know the behavior of the market. We come and break structure there, and now we anticipate a pullback. You get? We anticipate a pullback. Now, in this zone, given that this is M15, you get? I highlight this zone. Now, what do I wait for? I expect some kind of thing like this, you get, on, let's say, M1. So when I see it, then I get in and then we start to shoot up. You get, we start to shoot up. But then it's also possible, what if the market shoots up, it breaks the structure, and then it breaks below? Then I'll be looking for selling confirmations because I can say that the market has rejected the upward move. You get? I hope you get that. So now we returned here and then it held and then we move. So now one of the other things that I start eyeing out for, then I start targeting this high here, because if at all this order block has been mitigated, then I can say here this was a demand zone. You get, this is a holding area of demand. So which means if at all demand is holding, I would expect to come and break supply. You get, then but if I fail to break supply, then if supply holds, then we can reverse. You get, what is really interesting is that the market first hesitated to come and break above, rather it started to range. As you can see, it was ranging there, going sideways. You get, going sideways, creating a pool of liquidity here. You get, it was creating a pool of liquidity. But then in this range, what I was really interested in, is that the market was neither breaking down, but then it was not also breaking up. You get, not until this point, because you can see the market here, this move. Let me show you. We have this range down, and then we go up here. We are not breaking above, but we are just there. Then we come, then okay, anyways, we came and broke here, but then we didn't break above significantly. You can see that the market is not breaking, not until this point when we got a clear break above. You get, we got a clear break above. Now this break above, you can see that we broke with an impulse. You can see that buyers dominated. You get, this was a strong impulse. You get, so which means here this candle, it has the most range. You can see that it was a massive spike. You get, it was a massive spike. Then what do? Then we created a new area of demand. You get, we created a new area of demand. So which means each time the market is tapping into this zone, my brain is triggered into buying. You get, is triggered into buying. You get, so we have demand, we create another demand, and then this demand, you can see that it is breaking above. You get, it is breaking above. So you're seeing these order blocks are helping us to find a range. You get, they're helping us to find a range, but then they are what we call breaker order blocks. Let me explain them. Now breaker order blocks, this is what they are. Now let me first explain here. Now what are breaker order blocks? Now breaker order blocks, Now you can see that this is a bullish market. Now these ones are going to be here. You get? Now if at all we had a bullish candle here, you get, with range, you get, let's say a good bullish candle, and then we came and broke below it, you get, a good bullish candle there, and then we break below it. Sometimes the market comes and then taps into it. That's a breakout order block. Actually, for these ones, in future videos, I believe you come to understand them much better. Let me, for a bearish market is like this, and then we come and break, and then we come like that. Now the breakout order block is going to be here, you get. So sometimes we can highlight it, and then so we could have a number of areas that the market is interested in, even here. So as the market is returning, we could even have like 3 points of interest. There's 3 points of interest. So we watch. So if at all the market reacts to this breaker and then we get a reversal in here, then we continue to sell. But it's possible that the market will proceed to this one or even this one before we get a reversal, you get. So we have to be as flexible as we can, you get. We have to be as flexible as we can. But anyways, for this one, that's why we have a break of structure here. And then for me, this candle here with the most range, I would highlight it, you get. And then I could also have this point here, you get, this point here, and then this point up here, you get. So these are all points, where I would expect a reaction, but then I got a reaction just here. So then I move on with it, you get, because this is M15. So you better analyze, if at all you're doing price action, you better analyze on at least M15 and upwards to get clear, more clearer zones, you get. And then what do we see here? We also have another breakout structure here, and then we had a massive candle, you get. You ask yourself, if at all we have this strong impulse run that is coming down, all of a sudden we come and run into it, you get. By the way, I'm also going to make another video on order blocks. You see these candles, by the way, there's something special about validating order blocks. Not all large candles are going to be order blocks, but then let me explain here. We have a breakout structure there, so we would have validated here to see what happens in this zone, you get, in this zone as we're returning. The market comes, it breaks below this liquidity, and then it shifts up, you get, you take your entries. But now let me quickly explain this about order blocks. So if at all it's a bullish order block, which means it's going to be a bearish candle, the next candle, which is bullish, you get, it doesn't have to go below it, you get. Because now if this candle here, this blue candle, if it had started here, if it had started from down here, you get, down, if it came and broke below here, you get, below this point, this tip here, it wouldn't be, this candle wouldn't be another block, you get. It wouldn't be another block. The same thing for a bearish order block. I will show you. So which means it doesn't have to run below it, you get. It doesn't have to run below it, but it is good for it to be like for a candle to run through it, you get, but not below it, you get. So yeah, so we can see that there was a nice opportunity over there as we returned, you get. And now what do we target? We are looking at this range. We have this range, and then we have this downer range, and then this is our trading, that's our trading range. Anyways, that's our trading range, you get. And then we can see that we reacted to it nicely. We moved up to our take profit level, and now we can see that we didn't break above rather we created a new range, so which means supply held. We didn't break above supply. Supply was holding, then we were targeting demand. You get, we were targeting demand. So after a supply, no, so now supply was holding, so which means demand was failing. So that's why we would have an anticipation of coming to break below these laws. You get, below those laws. So you have to be as flexible as you can, as flexible as you can. The same thing, we came and broke below this structure, break of structure here, and now where was the last manipulated area? It was here. You get, with range. You get, so we react to that one, and now we come and pick up orders there, and then break below. You get, what did it create? You can see that we have a range here. This range creates an area of supply. You get, now the moment we react to this area here, it is most likely that it has been mitigated. You get, but remember, we have other zones that you're seeing over there. You get, and then we have another one, let's at the tip here, but this one is almost the same. You get, so what we will be watching these zones. You get, so sometimes we can just sometimes you can just highlight the whole of this area here. You get that area. So now this one has been mitigated. So as we are moving up, it's a possibility. We have to be as flexible as we can, because it is a possibility that we could move and then like this, and then we shoot up. You get, but then if at all we reach in this zone and then we sell, then we could say that this is a valid supply zone. You get, so the next time we come and then we get a reversal, then we continue to sell. Not until this point when we could see that we got a break above. You get, now you can see that we have a nice order block just over there. This candle here, that nice order block, we return to it, and now we are targeting up. So which means if at all demand is holding, so we are targeting not only this area, these areas, but we are expecting to break above them. This is crash 300, so you will be watching. So we start targeting upper areas of interest. So I think for now that's it for order blocks. But these are some of the ways, these are some of the things that you can apply to the charts so that you can understand them better and look for better entries. I wish you the best, and peace.